Greetings, everybody. This is Jeff Scott. It is, well, it's almost October 6th, 2019. This is my top-down review. Boy, was that some dead cat bounce that we saw Thursday and Friday. I titled today, in honor of that, Retracements and Downtrend, or Start of Something More. And we'll look at that. I think that's a big question. My email address, if you have any questions or comments, are right there. And this usually takes about 50 minutes. There's a PowerPoint as I look at the market, and then we'll look at some of the programs I use to find some interesting stocks that I might be looking at. Let's go ahead and let's start. Disclaimer, same thing that everybody else will tell you. This is for educational purposes only. I'm a doctor, not a broker. I'm independent. I've paid for all the tools that I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. I always like to thank the folks that I learned from. I started with CanSlim, which was improved by Ian Woodward, his partner Ron Brown, Morales and Catcher, money managers that used to work for O'Neill. John Person, who really taught me how to take a list of stocks and figure out how to make money with them. Van Tharp, the king of position size and money management. My friend Cigar from Superior Profit. He's got some excellent tools. Some of you were smart enough to get the deal that I told you about earlier. And then my buddy George Lee, who I often share the podium with and may be doing something in November. I think we are in Vegas the first week of November. I have lots of tools. I use all of the things listed here, but if I was stuck on a desert isle, I need TradeStation and Thinkorswim with some of the indicator packages that I have. Hgsi is my favorite analytic tool, as well as EdgeRater. And Superior Profit's got some great add-ins as well. In regards to Hgsi, I am independent, but they've been good to me from a support perspective, and I like to support them. Under investing strategies, you'll see hundreds of videos from me and others. And under free 30-day trial, they don't even ask for a credit card. I have a little bit of a different version of Hgsi. Those who've been listening know that I've been working on putting together an add-on with one of my favorite gurus. At this point, will remain nameless. But until that is all signed and done, the add-on things that I use, some of them, which I'll show you, which are different, are restricted. Stock patterns are cyclical. It certainly felt that we were in stage 4. The market certainly was weak. Now the question is, are we just pulling back a little bit or retracing a bit and still going down? Or are we starting a new uptrend? Now, if we've gone back over the last couple of years, which has been a fairly steady uptrend with a lot of pullbacks, you can take off the top of this pattern, and what we keep doing is looking like we're rolling over, then a leg up, and as soon as it seems like we're breaking out, we fall back down. So as far as I know, we're still in that. Now, I do have some cash, raised cash. I do have less positions and some smaller positions, and I have playing a little safe. But I'm a little bit more aggressive than I was a week ago. I think that Friday or Thursday and Friday were, I don't know if it's a big difference, but it certainly was a couple of different days. Speaking of Friday, you see a sea of green. By sea of green, I mean as you look through the different sectors, and I'll update these because some have been changed, you can see mostly green, just a strong day all around. Major markets, let me just flip into Thinkorswim. Just an aside, this is a different resolution. I'm actually running this on a Mac with BootCamp, which is sometimes my fastest Windows setup. The resolution is 2880 by 1800. So I think more and more people are going to 4K. 4K is too big of a video file to upload. For me, it takes too long. So I'm going to try this size, and there's a lot of reasons I like it. It's much clearer from my perspective. Here's the major indexes. I always like to look at these. So let me just open this up, maximize sell. This is the E-minis. And you could see, let's give it some more room maybe. Daily, a year. You can see the high of the year was reached here back in July. we keep, double, triple tops in this area. We've pulled back into the 200 on the daily, and then just like we have here, here, we had a big rally as we got close to the 200. And is this the start of something new? It remains to be seen. We'll look at the other evidence that we have going forward. The NASDAQ, let me give the same duration. A similar pattern, again, the high in July did not quite get as close to the 200, but a big, ferocious two-day move. If I look at the next one will be the YM, the Dow Futures. And again, let's try and give the same amount of data. I gotta go down here and adjust this one here. Similar pattern, again, big move. This one did hit the 200. Now, what hasn't participated as well as the Russell, and we'll talk about the Russell some more, especially when I look at some of the AD lines and some of the breadth, how this small stocks continue to lag. And, the high of the year was reached not in July, but the high here was in October of last year. The high of the year is May, but unlike the others, it was not an all-time high. And, you can connect the dots. We are in a downtrend here, and you can see how much we undercut the 200, but a big bounce on Thursday and Friday. If we look at the VIX, you can guess that it probably fell on Thursday and Friday, and it did. It's still above the 200, and it's still considerably above where it's been over the past year, where it spent a great deal of time down in the 13 and 14 range. You can take a look at that here. So it's still elevated, although it sold off the last couple of days. And the dollar, for those that are gold bugs especially, the dollar strength has been against gold. The entropy in the world and the rates have supported gold with the market selling off, but the dollar came back this week and gold was up. No surprise, or at least it was, I guess it was up. Last week we talked about it being at a nice support area. So the markets clearly have work to do to get back to new highs. And the question is this move here above the 50 in yellow across the board, except for the Russell, indicative of something new, or is it just still a retracement and a downtrend with more down to go? And I think you have to err, on the side of caution. So let's just look quickly at what happened using my 5 or 6 signals I look for in TradeStation. So on this chart, I have a combination of signals. The red arrow down and the green arrow up are the John Person PPS buy and sell signals. The paint bar is from Alexander Elder, where green is it's okay to buy, red it's okay to sell or hold for either of those, and blue it's kind of a neutral, you could buy or sell. Third thing I look at, where am I within my envelope? Fourth thing I look at is for these red dots here. Sometimes you'll get green dots, and these would be bearish MACD divergence. Green dots would be bullish. I look down at my high jump bar. When you get up to areas where the market's extended, that high jump bar can get as high as you can see down there is 95, 97, 98, and then at 100 you start to get to a point where the market's going to correct. And then the sixth thing I look at is the second dot here, is it green or red, which is the weekly bongo, which is my longer term trend line. So E-minis, you are in a daily and a weekly sell and a monthly buy. So very long term is bullish, but intermediate and short term are still bearish. You had a blue paint bar across the board, so that's neutral, better than a red paint bar. You're getting towards the middle of the envelopes. There's no signal there. There are no dots above or below, no signal there. Your high jump is at 78%, which no signal there. And you've got the long-term bongo, both the weekly and the monthly are green. I call this neutral as I can go, but you have to be neutral to bearish because you're in a sell signal. If I look at the Dow, do we see anything different? Kind of, let's see, looks like the exact same chart, doesn't it? Notice that last week, despite it feeling good at the end, and A lot of growth stock portfolios were up. The Dow actually got a sell signal last week. What about the NASDAQ? You could see a big, big day on Friday. The NASDAQ, interestingly, and this is good if you're a growth stock investor, not only did it flip to a buy signal on the daily, it's still in a buy on the weekly and the monthly. You got a green bar, so it certainly is okay to be buying there. High jump is okay. Notice that we actually had gone to a sell signal on the bongo, so that's interesting. So where the others were neutral to bearish, I'll put this neutral to a little bullish hopeful there. And then if I look at the Russell, which has been the weak sister, you could see how far down it is in the envelope. It's still in a sell on all three time frames, 69 in a red there. So the strongest index looks like the NASDAQ. Neutral is how I would look at the signals from here. I will often look at the dollar here just to get a sense. And the dollar got a new sell signal come in on Thursday. Notice these red dots, they can go on forever, but typically they lead to a correction. And the red dots suggesting that there is some, clearly, look at the MACD height here, look at the MACD height there, look at the high here to the high here. So clearly there's less and less participation in the MACD showing a divergence. So the dollar looks like it's set perhaps for a fall. And if that happens, that will be good for gold. And gold is in a buy signal as of Thursday, but on a weekly it's a sell, monthly it's a buy, and it's green. Like the NASDAQ, it looks okay. All right, then I go into Hgsi. I pull up the Major Markets Plus. I put my top-down view, which is all price and volume, and what comes right up to the top? Gold, bonds, utilities, and those are all kind of bear market types of things, or not, or a defensive market, which is not good if you're bull. And that's the miners that are up here where the gold is actually in the middle. If I look at the stocks, NASDAQ 100, mid-caps, NASDAQ composites, semiconductors are near the top. And that was clearly because this is looking at Friday's performance as the greatest piece. Now let's open up and take a look at some of the major indexes in Hgsi. Those who have been here before know I'm kind of boring. I do the same analysis every night on my own that I do here for you, and I'm not going to change it unless something else crosses my desk that works better. And I've been trading for over 20 years and usually make some decent money trading. And if something works, why would you want to change it, is how I look at it. So this would be the index view. And I'm going to look at 4 or 5 different things, and hopefully in a second my weekly chart will show up here. Let me try that again. Nope, it's coming. Got a lot of things open here, so let me talk about there it comes. Thank you for opening up here. So, just like we saw in TradeStation, we have a mixed bag. S&P, now this has been an interesting line to me for quite some time. So let's just take a look at this line here. Now in Hgsi, if I hold on the left button, and the shift key, I'll get a horizontal line. That line to me has sort of been the oscillating line, or the baseline, that if we can break above this line, then I think there's a chance that we could run. Now, we have failed back into this line the last 2 attempts. This was a prior high back here in May. Touched again here in June. Finally, we broke out. Now, interestingly, this red line here is the chandelier stop, which I'd have to break above that for this to really be a breakout, which is interestingly that the chandelier is just above my line of resistance. So on the weekly, just as we saw before, we've got a new buy signal, which is this green arrow here or right here. We had a couple of kahunas, which is kind of a big deal to get two kahunas in a row, but we had two kahunas the other way previously. We had a green candle low, which means we had the lowest low in the last 10 bars, and then we closed up on the day, so a new low and a up day. That sometimes is a bullish reversal. But on the weekly, it looks like we've got a flag. Now notice the day we had, or the week, where we pulled all the way back down to this moving average and closed at the top. Even though that's a red candle with a weekly sell signal, that's a bullish candle. And to me, I wouldn't be surprised to see us start to go higher from here. So that's the S&P 500. Let me move this down here. Let's look at the Dow Jones Industrial. A very similar picture. Here is the chandelier moving up, similar candle on the weekly. Let's look at the NASDAQ. There's nothing different there than the S&P. No reason to spend time looking at it. The NASDAQ, again, a similar pattern. You got to stop right above it, as well as the PSAR, a green candle low, a couple of kahunas, and a hammer on the weekly. Again, a lot that says it's going higher, but the market we've had, I'll wait to see what the market's doing before I tell you what I'm going to do for sure. And the Russell 2000 clearly looks different, much lower in the pattern, although it too having a move up on Thursday and Friday, and not quite a hammer on the weekly. Just continuing on the things I like to look at, I'll look at the biotech. I saw a lot of small biotech bouncing this week, but biotech is clearly down in the pattern. And as I've talked about, this is the industry that I work in. Over the past year, we're all waiting for something to happen from Washington where we'll see how they want to pay for drugs in the future. We know they're going to want to pay less, and I think that pressures all of biotech and pharma. Although, as someone said on one of the CNBC, a congressman talking about the future, or a trader talking about the future, said, you got to trade what you have. You really don't know what the future is going to bring. And then if you're an IBD subscriber and trade IBD stocks, as I may do from time to time, there's the Innovator IBD 50, which is a managed ETF of IBD stocks. And, no surprise, it had a couple of big up days. Not quite a hammer, but a big tail, bottoming tail here as well. Major moving averages are pointing down. The message here is it's tough making money now trading high growth stocks. I think you already know that if you trade them. Very quickly, the dollar index, we talked about on TradeStation how it looks like perhaps it's peaked for a while. Maybe we'll see. It certainly has pulled back. It's not broken down by any means. The VIX, I showed you the futures, and you can see the VIX here has pulled back, but it's still much higher than it's been. So there's still some concern there. A couple of kahunas and a sell signal, that's good if you're bullish on the market. And then if I look at gold, which was last week, it was sitting right here, and I said it was at a good point to watch and maybe start to nibble. It weakened on the first couple of days and ended up a little bit higher than it started the week, and you could see that candlestick here, a little bit move up. Still looks like it's primed to go higher. Silver, very similar. Gold miners had better performance at the end of the weeks, and let's just see if they look any difference. Gold miners ETF. Well, they certainly have pulled back further. They just had a very strong day on Friday. So I look at this, and what does it tell me? It tells me that the markets still have indecision. I don't see markets that are definitely going down. I'd like to see them take out those chandelier stops and show me that this is not just a retracement and a downtrend. For example, what do I mean by a retracement and a downtrend? I think we could all agree that gold miners are in a downtrend. Okay, it's a very short-term downtrend. A retracement is when you move back up to the top of the channel. Then what happens when you get top of the channel? You go back on down again. So a retracement could be a short counter move and an overall downtrend. That would be different than something that truly breaks out and goes much higher, and obviously that would look something like that. Actually make that an arrow is what I wanted to do. You know, if we get something like that, that's a breakout. But right now we are just a retracement and a downtrend, but you know, for this index, you know, it looks like you could run up a little bit more, but still a retracement and a downtrend is a lot different than a pullback. That's the wrong one. I'm sorry about that. In an uptrend, which we were in an uptrend. Again, you buy pullbacks in an uptrend, you sell retracements in a downtrend. So that's where sort of the bearish tone comes in, and you can see that on a lot of the indexes as well. Next thing I do is I go to industry groups, I hit the warehouse view, and eventually they'll pop up in here. I want to kill that index thing because that is an index of indexes and doesn't mean anything to me. So give me a second to kill that. Things are a little slower on this machine, not necessarily because it's a Mac, but because I've got a lot of windows open. In the meantime, let me come down and start closing some of those windows. Well, actually, I don't even think I got back. Well, I'm going to come back to that in a second. So I can't close that. So let me actually go back into my PowerPoint for a second. So that was how I look at the major indexes. Now let's look at some of the other things in the market. On the weeklies, you can still see that we're in long-term uptrends, except clearly a downtrend on the Russell, a topping candle on the VIX, and the dollar's been in a relative uptrend despite the recent modest pullback. What happened underneath the index is the yield curve rose, which I'll show you next, but rates fell on both the 10-year and the 30-year this week and got back down to troublesome levels. You can't see it well here. I can see it. Heck, let me show you something. I think you can see it easier here. If I go into chart, let me change this to that chart. Watch down here. I'm going to make it light up. As you can see, it's bounced off of the inversion line. So the yield curve, or the 210 delta that the markets are so concerned about, actually improved here. Meanwhile, rates continue to fall. The AD lines, interestingly, the Russell 2000, you can see it falling down here. Well, it's hard to see, but you actually, in the large stocks, actually hooked up this week. If you look at the NYSE AD line in white, you'll notice that bonds, which is this blue here, rallied this week. But you'll also notice that the Qs, which is this light blue, also rallied while everything else turned down. So you've got a divergence between some of the large tech stocks and some of the smaller stocks in the market. What about breadth? Stocks above the 200-day, stocks above the 40-day both fell this week, yet the 3-month or 12-week new high, new low actually trended up. So even though you've got some longer-term weakness, we had some short-term improvement. Not much going on with the McClellan, but we're nowhere near reversal signals on the McClellan as the markets come back some. And on the weekly, similar here. You can see the big hammer on the S&P weekly this week. Buckets show that, despite Thursday and Friday, the markets are still under pressure with 72% of the stocks in the S&P 1500 trading below the midline or their Bollinger Bands. And you could see most of the stocks are near the bottom of their bands. Now, that could actually be a positive thing. Usually before it's a definite reversal, those ones less than zero start to get pretty high. There's not been a Hindi in quite some time. No surprise, a Hindenburg is a signal of a market that's overbought and a market that's getting pressure on it, where the professionals are selling to the amateurs. And we haven't seen one since August 1st on the NASDAQ and August 15th on the NYSE. Classically, it's a signal on the NYSE. I look at the NASDAQ as well. Market tone, we were bullish. Then we had 3 very bearish days, Monday, Tuesday, and Wednesday. Actually, that would be Tuesday, Wednesday, and Thursday. And then on Thursday and Friday, we had a series of kahunas on most of the indexes except for the Russell. And what we saw was the bearish tone here. This is the Woody indicator, went from red to yellow, except for on the NYSE, perhaps pulled down by a lot of the energy stocks. So that's interesting, a move to neutral, certainly not bullish. And sector strength also shifted to neutral, where materials are still red, and no surprise, defensive utilities turned to green. Now, I always like to look at the canaries in the coal mine, and what I thought was interesting here was we pulled back to the same support we've pulled back to in August, and we bounced, but we're getting into an area where there's lots of resistance with lots of moving averages, and that chandelier stop sitting here before we would see a breakout. Know your news and earnings. We could see on the right, unless you have one of these stocks, and even Delta came out with numbers last week, so I don't think there's much of a surprise coming there. Not much earnings this week, yet if you look at the news, Jerome Powell speaks Monday, Tuesday, and Wednesday, and the FOMC minutes come out on Wednesday. PPI and CPI and jobless claims and all the economic data are taking on more importance as the market starts to balance whether or not the Fed's got 1, 2, or 0 more cuts left this year. And you'll notice there's a lot of other Fed heads speaking. So market rebounded sharply off lows midday Thursday and then solidified gains with Goldilocks employment numbers on Friday. Still, major indices dropped between 0.5% on the NASDAQ to 1.3% on the Russell, despite an end-of-week rally. I showed you the small stocks AD lines are falling while the large stocks are holding, so there's a divergence there between those two. From the big picture, it looks like a retracement and a downtrend, but I showed you some weekly hammers at support, which could mean that we have a little bit more room to run to the upside. Clearly, news will continue to swing the market this week. Will the Fed drop 0, 1, or 2? As I said, we got Fed minutes and lots of Fed speakers. Economics, not much from earnings, and the craziness in D.C. will continue. I stuck my toe in the water with a couple of longs, removed some of my downside, or much of my downside protection, but left on my puts on Amazon. And someday I'll show you how I use butterflies and other strategies to put on puts at a discount to protect my positions. All right, so a quick note. I share the stage with John Person down here in South Florida this time of year, and I usually run a meeting adjacent to his. I just wanted to talk about his program that's coming up. I am hoping to be there. If I'm there, it'll be more as an attendee, unless I've got something to show you new coming, and I'm working on that. But he's got a trading seminar coming up, a 3-day trading, and it is in Palm Beach Gardens, where I live, from October 31st to November 2nd, 2019. His website is personsplanet.com. He's a great teacher. As I said, I've learned a lot from him. 1478. The hotel it's at is a Hilton Garden Inn, which is actually one of the nicest Hilton Garden Inns you'll find. I highly recommend you attend. And you'll probably see me there for a little bit at least. All right, let me close that. And let me kill that I want to kill. Good. Hopefully that's all I killed. Yes. So let me just do this. As I said, it's not as much the Mac as how much I've got running. So since I'm not going to go back and use Thinkorswim, I am going to go and I'm going to kill it for now. I also think that, all right, perfect. So this is, all right, so, no. No. Now that doesn't, all right, so I'm going to go to 2. So I'm going to use a 2-day force to rank stocks. And of course, now I've got to turn off. All right, what did I do here? Hold on one second. I'm going to pause it and fix this. Maybe I'm not going to pause it since I can't see the pause button. Somewhere down here. Let's see. I did something screwy, so let me just see what I did. Industry groups, warehouse. No filter. Okay. They're back. All right. Come on. This happened to me once before, and I'm trying to figure out what I did differently. For a 2-day down, I know there's not many 2-day downs. All right, I'm going to see if I can stop this. Hold on a sec. All right, we got gremlins here, but we should be working now. All right, so I can't get rid of that industry index. I got to figure out why. But anyways, that's fine. So we'll look at 2 through 11. So I look at the 2-day force up, and you could see application software, semiconductors, telecom, internet, infrastructure, internet-based, e-commerce. What that tells me is on Thursday and Friday, growth stocks were back in vogue, and you saw the bounce on the IBD list. 2-day down, it's energy. Energy's been weak. I commented that's probably part of why the NYSE is down. Let's go back here, 2-day up, and let's take a look at a couple of these application software. Now you notice I did a right click, and let me just show you what I did back. So I highlighted what I want, I right clicked it, changed the index group, and it shows me all the stocks in that group. And I'm typically interested in those that are above the midline. I'm going to show you a couple other tricks right now. I'm going to double click on Avaya, and it'll take a second, but I should open up a chart. And then when that opens up, yeah, I'm going to have to play around with the settings here. It was working fine before I started the Snagit. I think that that is using up a lot of my horsepower, especially recording it at this level and in high, excuse me, in a higher quality. All right, so let's open up the weekly. It should be opening up in a second. Okay, so I want to show you a couple different things I have here. I like to set up here in this window earnings. I like to set up so I know what group we're in, what the multiple is, what the next quarter estimate is growth is. Here's the revenue here line with quarter over quarter. Revenue on top, earnings on the bottom. Here's sort of a graph of the last 4 and next 2 of earnings. Over here I've got my indicators, the weekly bongo, the daily bongo. This one here is distribution. I got a long force and short force. Then I have here my buy sell indicator, which is the same as the arrow and the same as the green there. Here is the high jump. This is green candle low and red candle low. The next line, you don't see one to back here. That's a Bible gap up, a squeeze, mobile breakouts. This is the industry group line. This here is called a bingo. It's what you see when the market's trashed. Down here, you got my indicator again. You got pocket pivots, blue or positive, red or negative. This line here has on-balance volume, and these are Phoenixes, which is a follow-through day to the downside from Ian Woodward. These are Eurekas in green to the upside. These are my Kahunas. Now, if you open up Edit Current View, you can open up a window that is called the warehouse field. And in that warehouse field, you can add whatever you want. Okay? Whatever you're looking for, you can add into a warehouse view. So, that warehouse view is sitting down here, which gives me 1 day and 5 day price changes, annual highs and lows, how far I am from the high and low. This warehouse field, I've got it setting here. You can look all kinds of things to play with. Upper left tells me short interest, VPOC, optional, etc. Then I have a warehouse field that's looking at my buy-sell indicator, what percentage of the industry group that the stock in is in a buy or a sell, how many were buys and sells in that industry group today, and then I'm looking for a bullish doji reversal daily or weekly. Then I have one other warehouse view field, and all these things slow things down, of course, where I have, and that one, by the way, is down here, and then this one right in the middle looks at bullish and bearish daily and weekly doji reversals. So I can look at this chart. I can see we've been down. We're below the 200-day moving average here. The blue is 50, the green is 17, the 8 is exponential. These lines here are the chandelier stop. The little dots are the PSAR. I have a lot on these charts. I know that, but to me, I just got to look at that right edge. So here's Avaya, had a huge move on Friday with a kahuna, a new buy signal. Everything is green there. It's hard for me to buy something that was up in 1 day 30%. So I'm going to watch it, but I'm not sure I'm going to jump on it at this point. The earnings per share growth are kind of tepid. All right, so I got it. To get the right order, I got to make sure I double-clicked it. The next one is the Stars Group. Again, makes money, but without much growth. Had a Bible gap up on Wednesday and held up. That looks a little bit more interesting to me because there's rules about a Bible gap up from Morales and Catcher. Activision, I don't love this company, but maybe I should pay more attention. A little bit of a pullback. It's above its moving averages. It had a PSAR reversal. It flipped its chandelier. Mobile breakout from a squeeze. My indicator turned positive on Thursday. It had a pocket pivot and a couple kahunas in a row. That's actually a very bullish chart. That might be one to look at later. I'm going to throw this into my buy list, of which I've already got a few to share with you. Boy, oh boy, it does not like it with everything. Everything was good until I added the Snagit for the video monitoring. So I continue to tinker to figure out what the best setup is. All right. Let that add, and then it'll flip. Okay, Adobe also looks interesting. Now, I saw a lot of stocks like this. Clear downtrend, certainly on what looks like support. It actually undercut support and rallied here from a squeeze. Look at the long 3 weekly bottoming bars there. Again, it's not a stock that's broken out and running. It's buying stocks, good companies that have pulled back to support. It's got nice growth in earnings. Twilio, it's broken way down below the 200. I'd probably pass on that, but that means going up slack doesn't look that interesting. MongoDB looks a lot like Adobe did with a pullback down to its 200 after an undercut, a kahuna, a mobile breakout from a squeeze. Might be something to nibble at. I'd feel better if it got above its chandelier stop. Viva, Not as deep of a pullback, sitting right below the 50, had a kahuna. Let's see if there's anything else I wanted to show you on here. So this was the leading group, and what does this leading group have in common? Fairly deep pullbacks and then a 2-day rally. Semiconductors, NVIDIA. Sideways move, multiple positive indicators coming in on Thursday, didn't do much on Friday. Looks poised to go higher. It's got some good earnings coming out in the second quarter to come. Micron, don't like its earnings per share growth, very much tied to DRAM pricing. Broadcom, sitting down on its 200, may turn out to be a good time to buy. I don't see a lot of momentum there. AMD, what interested me here was looking at the earnings per share growth. It's a high multiple stock. It's under a lot of accumulation. You're buying it below its chandelier stop and everything else. There's a lot of negatives here, but I would put that on my buy watch. If it has some momentum, I might be interested. Intel, Qualcomm, these are sitting right on their 50. Couple of kahunas, mobile breakout from a squeeze. That's a pattern I typically like. So Qualcomm might want to be on your watch list. No, let's see. All right, I just want to make sure I'm not missing anything that I thought looked really good. Precious metals. Think about what the gold chart looked like and what the gold miners did, and the same thing here. These have pulled back. You're getting down to an area that's reversed before. This American Barracks. This wasn't my favorite, but that one is interesting. Here's one that's actually broken out, a cheap gold play. If you look at JNUG versus Nugget, JNUG has been outperforming, and here's breaking out to all-time highs. If you notice down in this box, one thing that's interesting on gold stocks is 15 new buys and no new sells. So clearly there's some interest in accumulation of gold stocks. The one that I've been playing with here besides Nugget and JNUG has been Kirkland, which has been a good performer on the year, but like the rest of these, it's pulled back here. But here's a chart, uptrend, sitting right on the 50. No momentum right now, but that's the one that I've been in and been playing. Telecom carriers, Ring Central, don't know much about this stock. Had a Bible gap up out of a mobile breakout from a squeeze, a couple of kahunas. Earnings are not to November 4th. Don't have much in the way of earnings. Don't know the story. Pretty impressive chart considering what the market's been doing. A lower left, a stub, and a breakout. I've been a fan of the U.S. telcos because of dividends. I like AT&T more than I like Verizon. A little pullback here, pays a 5.4% dividend. And there's the index. Max looked interesting. It pays a 2.3% dividend. Sideways move, and here you are, mobile breakout from a squeeze, breaking above the weekly moving average on the relative strength versus the S&P. A big kahuna. I thought that one looked interesting. And frankly, again, these are tough stocks to buy because they're international. Don't know much about them. VIV was another one I think we'll see at some point in the telecommunications stock. Here it is. Sao Paulo, Brazil. Another pattern that looked good. This pays a 7.3% dividend, buying it off of support. I always like buying stocks off of support. All right, the next bullish group going down was internet media. Facebook, boy, there's a lot of people hate this stock or hate the company and love the stock. Now, looking at the chart, here you are sitting down at the 200-day moving average. This is usually a pretty cheap place to buy it. This is a typical story. On the daily, it had a daily doji reversal, bullish reversal, closing above the daily doji bar from Wednesday. And on the weekly, it's got a bearish one closing below the weekly doji. So here's one that's sort of confused. But if you like buying things at off support that are discounted. There's Facebook. I left Alphabet alone. You could argue pullback, Kahuna in a squeeze, big bottoming tail on the weekly. So that might be of interest to some. Let's see if there's anything else like Weibo, IQI, Twitter's pulling back, Baidu's in the trash. So not a whole lot there. Now, you're not seeing, at least I'm not seeing a lot of great breakout patterns that are working that I want to jump on and hold on. We'll see a couple of good stocks on this list. This is infrastructure software. Here is Microsoft. Boy, what a beast that's been $140 stock. Now, you're sitting on support. You've had a couple of kahunas. You're above the moving average on the weekly RS versus SPX, coming out of a squeeze. You know, I would have no problem buying the stock if it traded above the close. Doesn't have great earnings per share growth, pays a small dividend. We find something better. OKTA had a bounce earlier in the week. Wednesday reversal, Thursday, Friday, Saturday, or Tuesday reversal, then Wednesday, Thursday, Friday up moves. ServiceNow, I like this one a little bit better, breaking above the 50. Mobile breakout from a squeeze, 2 kahunas. A weekly buy signal as well. Now a break above that area would be interesting. So in fact, if I was looking at this stock, I might say if it trades above the chandelier stop, and the chandelier stop is where? It's on here somewhere, I promise. Boy, I got so many things here. 267.76. So it'd have to go to about 268. It closed at 266.48. So I'd like to see it trade above that amount, and then I'd probably put my stop. The 200 is at what? $260 was the low there. 250. I'd probably keep a stock pretty close. The 50 and the 17 are both above 260. So maybe 258, 259, giving it a little room to breathe and risking no more than 4%. But this is on my buy list. This is ServiceNow. Why? Kahunas. Reversal. Break above the chandelier stop will trigger. Mobile breakout from a squeeze. Oracle, another one that looks interesting. Old name. Mobile breakout from a squeeze. Breaking above its moving average on the weekly on the relative strength versus the S&P. What I call the magic line. Kahuna. Buy signal. Mobile breakout from a squeeze. Probably a low risk entry here with a weekly bullish doji reversal. And we'll move forward. So a couple of interesting stocks there. Internet services. I like the SEC one. In fact, I bought some this week, and I'll talk about why. All right, Shopify. I've missed this thing. I look at its lack of earnings. I don't understand it. Everybody loves the company. Great stock, power move. Is it time to buy it? It might be. I'd rather wait till it broke above a chandelier stop here and gave me some momentum down here. How about Coupa? This one I bought. Why? I bought it because it had a, right here. I put a buy order in on Friday if it took out its chandelier stop. It had a kahuna, took out the chandelier stop, mobile breakout and squeeze on Thursday. Big uptrend, pull back to the 50. I didn't give it a lot of room. It's a stock that's been really volatile in a tough market. You can see the week it had. Grubhub, no. You know, I'm not a big fan of bookings. Expensive stock, nearly $2,000. Nice uptrend. And again, the difference between a retracement and an uptrend and a downtrend and a pullback and an uptrend. I mean, here's a stock that's in a nice uptrend here. You want to buy it at the bottom and sell it at the top. Buy it at the bottom and sell it at the top. yeah, it's a buy point. I just not a stock that I know much about and one that I usually chase. Getting tired, so let me just quickly go through the next couple. That's not what I wanted to do. Try that again. All right. 2-day up, Netflix. That's an interesting story here. Lots of competition coming to market. You can see the stock. Now, there was a report on Friday that the international subs are increasing, and that will potentially drive the stock higher. I've made a lot of money on the upside. It's been tough of late. It's certainly been a downtrend. It has little retracements and goes back further. Notice in this group there were 6 new buys and no new sells. That's interesting. Trades at a high multiple. Next quarter is a little weak, but it's a turnaround. It's been falling. And then a big quarter the following quarter. Netflix, it's probably going higher from here. Just it's a little low in the pattern for my taste. The next one's Amazon. And Amazon, I've got a big position from 450. One of my best trades ever. And I sell puts. When I get sell signals on the weekly, I buy the stock back. I buy them back when I get buy signals on the weekly. We're still in a sell signal on the weekly. I have a tendency to do various trades to offset the price of a put. I can sell a call that's up here and sell a put that's further out of the money and hope that I don't take that out in a big dive. I can do a butterfly where it's a very cheap protection. The problem is if it falls too much, I may lose my protection. I may do a series of butterflies. We should spend a whole program once on how I protect a position. Alibaba showed some life on Thursday and Friday, still kind of sideways at best. Don't know much about Stitch Fix. So I typically will go through the top 10 groups. We're almost there. I might as well continue. Large pharma. J&J jumped up because it had a settlement that was looked at, I think, favorably in its opiate cases. Still in a downtrend. A couple of kahunas are nice. Not much in the earnings per share growth, pays at 2.8. My specialty is oncology. The king is Merck today. And Merck looks like it's getting ready to break out. Mobile breakout from a squeeze, a kahuna, a new buy signal on daily and weekly. It's in an uptrend. Looks better than most of the other stocks that are down below their 200. I think this one looks good. I'm trading my book here. I have a position here. Pfizer, bad transaction. BMS, also a big one in oncology, a big run up here. Again, like biotech, these are very subject to what Uncle Sam does on paying for drugs. AbbVie, it's a biotech, a big pharma stock that pays a hefty dividend of 5.6%, but has a portfolio like a biotech. I like this stock. It's had a nice run up off the bottom. I also hold this stock. It's getting up to resistance with a doji, and that's bothersome, so we'll have to watch AbbVie. And lastly, to complete the 10, renewable energy. A couple of these look good, so they're worth looking at the first 3. First Solar, great earnings per share growth. Does have a huge PE. No dividend, sitting right on support. 2 that I probably like better. Enphase, similar pattern, big pullback. Good earnings per share growth. It's had good earnings per share growth. Big multiple, but much less than its growth rate. Look at the demand for Enphase, 5.5. Now, you break above the 50, it's a lot less risky play, but you're going to have to give up $2 or $3 to get there. I'd probably be looking at nibbling earlier. And Solar Edge had great earnings, has traded sideways since those earnings. Looks to me like it's getting ready to run as well. So I will go through the top 10 groups every night, put together a watch list. Now, I have other things that I do. For example, I've created a series of scans using my indicators that will hopefully come available at some point. I paid for these to be put into Hgsi, and therefore there'll be a cost to them. But for example, I like to look at stocks that are let's see what I'm looking for. I'm looking for, this is a stock that's in a weekly buy that just had a new daily buy, so it must have been a pullback. And you could see we had a bunch of them this week. Some of them are stocks that you'll see on another list. Here's Skyline. And this is a pattern that I like. It's a stock. We're not there yet. I don't think. Come on. Come on. Give it to me. All right. Uptrend pullback sideways. A new buy signal came in. Probably a low-risk trade. So I have a number of scans I like to look at. And I've created a whole new plugin once I sort through some IP issues and get permission and figure out how we're going to price it. So that'll be coming out soon. But I always end up with a buy list, and then I like to show that to you. And when I say a buy watch, it's a watch list. I'm not buying all these stocks. Nobody can afford all these stocks. Nobody should buy this many stocks. But I like to put together a list. One thing I might do is drop down the industry and notice a bunch of REITs, something like American Towers, $200 stock. Nice lower left, upper right, sitting right at its chandelier stop. A little move up, it will trigger that, and it pays a 1.6% dividend. It's got great earnings rate. I looked at a couple specialty pharmas. I showed you the telecom carriers that I liked. Renewable energy, I mentioned those already. A couple of the precious metals. One of my favorite stocks is Paysign. I participated in Paycom earlier on. This one looks interesting here. Doesn't make much money. Under a lot of demand. Buying it as it's moving up above its chandelier stop and crossing in. You know, it's got to get above the 50, but this is a stock that's down 50%. That looks interesting. A number of the insurance stocks looked good. Uptrend pullback, Kahuna, mobile breakout from a squeeze, cross above the magic line. So there's a number of those that I liked. And then an old stock that I've been in and out of, and every time it drops, I should get excited. It's a financial, let me open this all the way. I'm sorry, I didn't mean for you not to see everything. Is Fiserv, and it's a financial services, I believe. Here it is. Big uptrend pullback, break above the chandelier stop. I'll be interested in it. Mobile breakout from a squeeze, a couple of Kahunas. So this was a large list of stocks, and you know what I do is simple. Okay, I take this list, and I haven't done it yet in Thinkorswim, but I put it into a radar screen in TradeStation. This radar screen allows me to look at cigar signals from Q, some of my Hgsi related signals, my earnings date, and then a bunch of John Persons, HCDs, LCDs, buy signals, sell signals, and you can put up to 1,000 stocks. Now, mind you, this is running on a Mac, and using BootCamp, and you could see I've got 700 stocks and a whole lot of indicators. I'll be using that during the day, looking for new buy and sell signals, and then when I find something, I drop it into my screener, and in my screener, and I'll pull something up that looked interesting to me. Who do I want to look at? So in my screener, I have a number of indicators, but what I really have and what I like the most is, and here's ServiceNow, so let's talk about that. 3 time frames, monthly, weekly, and daily. And this is one of the problems with the markets right now. This here is a auto trend line. Here is a trend line. So we have a lot of stocks that are just running in between the trend lines. So you really want to be buying these things when they're breaking out from their trend lines, not when they're in a Darvis box. Coop broke out of a trend line here, which is why I got interested in it. I've got a number of other indicators. This is my dots that have everything from a Bible gap up to a pocket pivot to a Mobo breakout or breakdown to a squeeze to a PSAR above or below to a red candle high, green candle low, and then a kahuna force. All in this dots. I've got my bongos. I've got John signals, 3 different time frames on a single chart. So I'm able to look at multiple different signals all in one pane. I like living on the right chart. But that way I can take this massive list of stocks that I'm interested in, add to them during the week. How do I add to them? I run a bunch of scans. I run scans every night. I don't think these are updated yet because I haven't done that yet with this computer. But I run scans every night, and those scans help me to add or subtract from that list. And I do the same thing in Thinkorswim with their Market Watch during the day as well. So I'm going to leave you again with what I said before. And let's just go to the S&P 500. Probably got longer than I wanted it to, but my wife's asleep, so that's okay. A little bit longer than I anticipated. All right. Let's go look at the weekly. Clearly a big uptrend. Are we the beginning of a new downtrend? Let me draw some lines. I mean, we've had a market. I didn't want to do that one. Hold on a second. Sorry about that. That's clearly been in an uptrend. Looks like a rising wedge, doesn't it? Now, will this resolve to the upside with a breakout or a breakdown? I don't think anybody knows. All we know is that we're getting closer and closer. So, is it possible that we run up here? Absolutely. Is it possible we run back down here? Absolutely. Those are relatively small moves. Yeah, they're 6-7%. Are we going to break above and go to new highs, or are we going to break down? I think that's the question. We're in October. This is the volatile month. You could certainly also say that maybe we've started a downtrend here. I don't know. I'm just playing with lines. And if we're in a downtrend, this is a retracement. I think it's too early to tell. I think that I am going to be watching the markets closely. I am staying somewhat defensive. When I put puts on my Amazon, that's a big part of my portfolio. I'm being defensive. And I'm wasting money when I don't use them, but I'd rather be safe than sorry. I think a lot of people are going to say it was a dead cat bounce. That's possible. I think these hammers off support are interesting. We'll let the market tell us what it's going to do. So on that note, I'm going to say goodbye. Have a great week. I'm mixed about next week. If I have time, I'll do it. If not, I'll see you in 2 weeks. Take care, everybody.